Hello, and welcome to the AUSTRAC Reporting Entity Forum. My name is Nicole, and joining me today is Gemma and Asim. We are all from the Industry Education and Outreach team at AUSTRAC. But first, AUSTRAC acknowledges the traditional custodians of country throughout Australia and their continuing connection to land, sea, and community. We pay our respects to elders past and present and extend that respect to all Aboriginal and Torres Strait Islander peoples joining us today. Thank you all for taking the time to join us. The purpose of this forum is to help you improve your AML-CTF compliance by providing sector-specific insights, addressing common challenges, and offering practical guidance. Before we begin, we do have a few housekeeping items to address. While this webinar is designed to highlight some key regulatory insights that may be relevant to your business, it does not constitute legal advice. Should you need to do so, we encourage you to obtain your own independent professional advice specific to your business and individual needs. This webinar should not replace or form part of your staff AML-CTF risk awareness training program. And finally, while we will be providing a brief update on the upcoming reforms, please keep in mind that this is not the focus of this webinar. AML-CTF rules and associated guidance are still in development, and AUSTRAC will provide education on this as details become available. In today's session, we will explore several topics, including a brief update on the upcoming AML-CTF reforms, AUSTRAC's regulatory priorities, insights from the regulatory supervision team, including common compliance challenges observed across the sector and their future focus for supervision work, an update from our enforcement team, sharing insights into AUSTRAC's enforcement activity and on how we respond to non-compliance. And finally, we will look at the 2024 compliance report data and how this may shape AUSTRAC priorities. Before I hand over to Gemma, I'd like you to take a moment to think about why you are here and what you would like to take away from this session. I encourage you, when you're listening to each speaker, to think about whether your business is meeting AUSTRAC's expectations in these areas. If yes, are there areas you can improve more on? And if your business isn't meeting AUSTRAC's expectations, what are you going to do when you go back to your business to improve your AML-CTF processes? To kick off today's session, we'll start with a brief update on the AML-CTF reforms, what it means for you, and what's coming next. To walk us through that, I'll hand over to Gemma.
Thank you, Nikki, and hello, everyone. As I'm sure you're all aware, Australia's anti-money laundering and counter-terrorism financing, otherwise known as AML-CTF regime, is undergoing reform. These reforms are indicative of the Australian government's commitment to protecting the integrity of the Australian financial system and improving our AML-CTF regime. To this end, the AML-CTF Amendment Bill was passed in November 2024, amending the AML-CTF Act and progressing the simplification and modernisation of the AML-CTF Act, regulations and rules. One key objective of the reforms is to expand regulation to tranche 2 entities. These include lawyers, accountants, and trust and company service providers, dealers in precious metals and stones, and real estate professionals. Services provided by these sectors are recognised globally as high risk for exploitation, but are not captured under the current AML-CTF regime. For existing reporting entities such as yourselves, the reforms also aim to increase flexibility, reduce regulatory burden, and improve clarity by making key terms, obligations, and terminology more consistent across the AML-CTF Act and the rules. This simplified framework is designed to help you better understand your obligations and strengthen your ability to detect and prevent financial crime. The reforms also aim to modernise the regime so it remains fit for purpose in a rapidly changing financial environment. The reforms expand the risk-based approach, allowing flexibility as businesses continue to evolve. As part of this process, AML-CTF programs requirements are set to change, moving away from the ticker box compliance. The reforms will also better define the roles and responsibilities of a reporting entity's governing body, and the AML-CTF Compliance Officer, further supporting stronger oversight and suitability. The Financial Action Task Force, known as the FATF, is the global money laundering, terrorist, and proliferation financing watchdog. Influenced by the FATF, global AML-CTF regulation is inherently risk-based. Their first recommendation is to identify, assess, and understand risk. Almost all AML-CTF obligations flow on from this. As mentioned earlier, the updated requirements will place a much stronger emphasis on the need for meaningful risk-based controls. One of the key changes is the introduction of proliferation financing. Proliferation financing is when a person makes an asset available, provides financial service, or conducts a financial transaction that is intended to facilitate the proliferation of weapons of mass destruction, regardless of whether the activity occurs or is attempted. While some of you may have already been considering your proliferation financing risks, the reforms now specifically require this. It will now also be explicitly required that reporting entities assess their money laundering, terrorism financing, and proliferation financing risks as part of their AML-CTF program. Whilst you may already be doing this in practice, this change formalizes that expectation and reinforces that your risk assessment must be the foundation of your AML-CTF compliance program. There are other structural changes to the AML-CTF program under the reforms, such as moving away from having a Part A and Part B program, and a requirement for you to create and maintain appropriate AML-CTF policies to manage and mitigate the specific risks identified in your business. Beyond the content and structure of your AML-CTF program, the reforms also address practical elements, such as strengthening governance frameworks. The reforms will require you to have a governing body, senior management, and AML-CTF compliance officer, and the legislation will clearly define these roles. The governing body and senior management will be required to provide ongoing, effective oversight of the business's AML-CTF compliance and risk management activities. And while the obligation to have an AML-CTF compliance officer is not new, the reforms place a stronger emphasis on the suitability of the individuals in these roles. This will mean that the person appointed to this role must meet specific fit and proper requirements to ensure they have the necessary expertise, integrity, and seniority to fulfill their responsibilities effectively. More information on the AML-CTF compliance officer will be determined through the ongoing consultation on the rules. You may have also seen in the amendment bill that independent reviews or evaluations will be required to be conducted at least every 3 years. This does not mean 3 years will be appropriate for all businesses. The frequency with which evaluations must be conducted must still be appropriate to the nature, size, and complexity of the business. The rules will also clarify the requirements around the conduct of independent reviews. Finally, a core objective of the reforms is ensuring obligations are clear and reflect contemporary business. This is particularly evident in a number of targeted changes covering obligations like customer due diligence, international value transfer service reports, value transfer chains, and tipping off. To summarize these points, you will have seen clarity achieved in the reforms to the tipping off offence, which came into effect on the 31st of March this year. The changes now focus on whether disclosing information would or could reasonably be expected to prejudice an investigation. This new harm prevention approach shifts the focus from compliance to risk and reduces unintended compliance challenges or regulatory burden. There will also be changes to customer due diligence requirements to ensure a more targeted and flexible approach, focusing on outcomes that help mitigate risks associated with higher risk customers and transactions. The reforms clarify and simplify customer due diligence obligations, reinforcing that customer due diligence is an ongoing process. These changes will also clarify the level of checks applied to each customer initially and on an ongoing basis. They outline expectations around customer risk rating, initial, ongoing, and enhanced customer due diligence. International Value Transfer Service reports will replace the current International Funds Transfer Instruction reports, otherwise known as IFTIs. This reporting obligation will now lie with the reporting entity closest to the Australian customer, better reflecting how these businesses function in practice. These changes will come into effect the 31st of March 2026. For now, I'll hand you over to Nikki, who will take us through AUSTRAC's current regulatory priorities and how they shape our engagement with industry.
Thanks, Gemma. Let's turn our focus now to AUSTRAC's current regulatory priorities. While the reforms provide insight into the future of the regime, our day-to-day work is guided by the risks and issues we're seeing across the reporting entity population now. These priorities shape how we engage with industry, where we focus our supervisory efforts, and how we support reporting entities to strengthen their compliance. In 2023, AUSTRAC published our regulatory priorities for the first time, outlining our focus areas for strengthening Australia's financial system's resilience to money laundering, terrorism financing, and other serious crime. These priorities are structured around 5 key themes. The first is our enduring priorities, which include core areas of compliance, such as AML-CTF programs, MLTF risk assessments, reporting obligations, and high-risk sectors. The second is an increased regulatory focus on emerging and high-growth sectors. This applies to digital currency exchange or virtual assets, payment platforms, bullion, and non-bank lenders and financiers. The third priority is serious and systemic deficiencies. This theme relates to compliance failures in key areas, including board and executive accountability, transaction monitoring programs, and the outsourcing of AML-CTF functions. The fourth priority is continuous improvement, which will modernise and improve Australia's AML-CTF regime. The Australian government has reiterated this throughout the legislative reforms. And the final priority is partnerships, building and maturing strong relationships with a wide range of partners across industry, government, and law enforcement to support our regulatory objectives. These regulatory priorities aren't just high-level goals. They directly influence the way AUSTRAC approaches supervision. They help shape our engagement with industry, inform where we focused our attention, and guide how we assess and respond to compliance behaviours. To provide more insight into how these priorities have been implemented, I'll hand over to Asim, who will share some of the regulatory team's recent supervisory work, key observations, and areas of focus going forward.
Thank you, Nikki. Good afternoon, everyone. I'm Asim. Today, I'll be sharing with you what the regulatory team have been up to over the past year, some areas of concern, and what the team's focus will be for the next 12 months. As you may know, DCEs or virtual assets were identified as a high-risk area in our agency's regulatory priorities for 2024, in line with our national risk assessment, which is why we have been taking a close look at the sector. Over the past year, the team has conducted a number of activities within the sector, including compliance assessments of DCEs, to see how well they are managing their risks by reviewing the AML-CTF programs, proactively engaged with DCEs to better understand the role of market makers and liquidity providers and how they can be managed effectively, and working one-on-one with DCEs to review the transaction monitoring programs and suspicious matter reporting process, providing tailored feedback to help them improve. As we move forward, I would like to highlight some key areas for improvement that have been identified. These include customer due diligence, transaction monitoring programs, governance, and reporting obligations. Let's dive into each of these areas and explore why they mean for your business. The first area for improvement relates to customer due diligence. AUSTRAC has noticed through our work that a number of DCEs outsource some of their AML CTF functions to third parties. AUSTRAC understands that outsourcing certain customer due diligence procedures can be beneficial way to get specialist expertise or manage cost. However, if you do not have appropriate oversight of your outsourced functions, it can generate a host of compliance issues and risks, all of which you remain liable for. For instance, the regulatory team reviewed a DCE who engaged a third-party provider to run identity checks on prospective customers. Through no fault of their own, the third-party provider experienced a system failure and could not verify identity documents for a period of months. The DCE claims that the third-party provider did not notify them until after the error was resolved. However, in these circumstances, it's the reporting entity that fails to meet their AML CTF obligations. With these challenges in mind, late last year, AUSTRAC released updated guidance to help identify and manage the risks that may arise when outsourcing AML CTF functions. Another issue we have noticed is some DCEs fail to review the outcomes of identification and verification checks before onboarding customers. In a sense, allowing some customers to create accounts and transact without meeting internal KYC requirements. A concurrent area of concern that we have identified is that a large number of DCEs do not seem to appreciate that MLTF risk is active. A lot of AML CTF programs we reviewed in the last year do not stipulate or state when or under what circumstances KYC information is to be refreshed. Good AML CTF programs incorporate regular scheduled KYC refreshes in combination with ad hoc triggered responses. The second area for improvement relates to transaction monitoring programs, or TMPs. Every DCE should have a transaction monitoring program. In fact, all reporting entities are required to have one before providing any kind of designated service. Good AML CTF program in the sector account for both on-chain and off-chain transactions in their TMPs. One of the issues AUSTRAC has seen in TMPs include not tailoring your TMP to fit the realities of your business. Every organization has distinct characteristics, customer base, and risk profile. As such, a one-size-fits-all approach to AML CTF programs and TMP does not suffice. AUSTRAC has seen instances where businesses have relied on generic, off-the-shelf templates, or worse, still automated tools to create their TMPs. This approach can lead to inadequate risk management and non-compliance. A well-crafted TMP should demonstrate to AUSTRAC that your business not understands its risk exposure, but also the effective strategies it has in place to mitigate them. Investing time and effort into developing a bespoke TMP that aligns with your business's specific needs and risks is crucial. It's not just about compliance. It's about protecting your business and your customers from the ever-evolving landscape of financial crime. Before I dive into governance, let's revisit the purpose of a TMP. Think of it as a safeguard that helps you identify transactions that don't quite add up. When something doesn't fit your customer's profile, your TMP should create an alert and flag it for further investigation. If it is suspicious, you will need to dig deeper, apply enhanced due diligence, and submit an SMR to AUSTRAC. However, If your TMP is not triggering at all and you have customers transacting regularly with you, I would recommend reconsidering if your TMP is appropriate for the current state of your business. Your business is constantly evolving and your risk controls need to keep pace. If you're not sure whether there might be gaps in your transaction monitoring program, I would suggest taking a look at some of the indicators for suspicious activity on our website. And don't forget, your TMP should be subject to regular independent review to ensure it's working effectively. It's all about staying on top of risk and adapting to the changing needs of your business. Now, next, I would like to highlight is governance and some of the deficiencies we have observed. Governance is a challenge we are seeing across the board, not just in the DCE sector, but across industries. It's one of our 2024 regulatory priorities for the agency. When we take a closer look, we often find that businesses have a solid AML/CTF program on paper, but the reality is that it's only as strong as the people who are implementing it. The issue is that many programs rely heavily on one or two key personnel, typically the AML compliance officer. And what happens when that person moves on or is unavailable for an extended period? The program can really struggle to function effectively. But here's the thing. Your obligations under the AML/CTF Act and rules don't just disappear. You have still got to meet those requirements, even if your key person is no longer there. That's why it's so important to have robust governance in place with multiple people, such as board and senior management, who understand the program and can keep it running smoothly. It's not just about having a good program on paper, it's about making sure it's working in practice every day. The last key area for improvement is quality reporting. As you know, as DCEs, you have got an important role in submitting reports to AUSTRAC, like annual compliance reports and suspicious matter reports, or SMRs. When you submit high quality, accurate, and timely SMRs, it really helps us detect, deter, and disrupt criminal activity. To make sure you are reporting effectively, it's crucial to have clear procedures in place for investigating suspicious activity, escalating it, and reporting it. And it's not just about having these processes in place. They need to be robust enough to work even when you have got staff changes or low staffing levels. I would like to take this time to remind you about your responsibility to keep AUSTRAC up to date with any major changes to your business. You have 14 days to notify us of changes like a new compliance officer, appointing an external administrator, significant changes in your business or the designated services that you provide. This also extends to withdrawing your registration if you are not or will no longer provide designated services. This is really important because inactive businesses can be vulnerable to exploitation by criminals. It affects the integrity of our register and diluting AUSTRAC's understanding of the potential industry's risk as a whole. If DCEs don't show us they are legitimately using that registration, AUSTRAC will look to cancel it. While there are definitely areas to improve, I am pleased to say that we have seen some positive trends in the sector over the past year. We have noticed increased engagement and commitment to AML/CTF compliance and a better understanding of the risks and vulnerabilities that the industry faces. Looking ahead to AUSTRAC's future priorities that our regulatory supervision teams will continue to focus on, ensuring reporting entities across all sectors have AML/CTF programs that are tailored to their specific risks and needs. We will also be monitoring how businesses adapt their programs to respond to changes in their products, services, or customer base. In addition, we will be working to support improvements in the quality of MLTF risk assessments and transaction monitoring programs. We will be assessing how well entities can detect and respond suspicious activity and reviewing their application of enhanced customer due diligence measures. One thing that's crucial to all of this is strong governance and oversight. We are talking about the role of both senior management and AML/CTF compliance officers in ensuring that programs are properly maintained and adapted to emerging risks. Our approach at AUSTRAC is always risk-based, intelligence-led, and outcomes-focused. We encourage all reporting entities to take a proactive approach to compliance. Regularly review your systems and controls and make sure they're fit for purpose in today's rapidly evolving risk environment. By maintaining strong AML/CTF programs and engaging openly with us, you will be contributing directly to the safety and security of Australia's financial system. Thank you for your time today. We hope engagements like this will help to strengthen our connection and support your understanding of AUSTRAC's role, as well as your business role in complying with your AML/CTF obligations. I will now hand over to Nikki to continue with today's session.
Thank you, Asim, for that overview of AUSTRAC's recent supervisory work and the practical insights you've shared. While supervision plays a key role in helping reporting entities strengthen their compliance, there are times where more serious or systemic issues require a stronger response. With that in mind, we'll now hear from Gemma, who will provide an update on AUSTRAC's enforcement activity, key themes we're seeing in non-compliance matters, and what to expect going forward.
Thanks, Nikki. If reporting entities do not meet their obligations under AML/CTF law, AUSTRAC can take steps to compel their compliance and/or seek a penalty. Enforcement actions are specific legal actions we can take to make sure reporting entities comply with the law. Enforcement actions available to AUSTRAC are civil penalty orders, enforceable undertaking, infringement notices, and remedial directions. Another type of action AUSTRAC can take is to issue a written notice requiring a reporting entity to appoint an external auditor to review your MLTF risk management or AML/CTF compliance, or undertake an MLTF financing risk assessment. We can also refuse, cancel, or suspend the registration of remittance service providers and digital currency exchange providers if they pose an unacceptable risk of money laundering, terrorism financing, or other serious crime. Over the past year, AUSTRAC has continued to use its full range of regulatory tools, including enforcement powers where necessary to respond to non-compliance and uphold public confidence in Australia's financial system. While we like to be transparent about our enforcement outcomes, it's important to note that not all investigations have progressed to the point of public outcome. So today, I will only speak to matters that are already in the public domain. We recognise that threats are evolving and controls won't always catch everything. But compliance failures in the AML/CTF regime can contribute to significant real-world harm. And where harm has occurred, or where the risk of harm has been materially increased by the failures, reporting entities should expect AUSTRAC to act accordingly. Recently, AUSTRAC undertook significant enforcement action against several entities for failing to comply with their obligations under the AML/CTF Act. One of the more prominent matters involved a casino operator where enforcement action led to a substantial civil penalty. The casino operator was found to have failed to meet customer due diligence requirements and had systematic weaknesses in its risk management and controls. As a result, the federal court ordered the casino operator to pay a substantial penalty. The decision was based on findings of serious breaches of the AML-CTF Act, particularly around ongoing customer due diligence and systemic control failures. These weaknesses allowed high-risk customers to move large sums of money through the casino operator's operations over several years, obscuring the origin and ownership of these funds. The casino operator also provided services through high-risk channels and to high-risk customers without implementing necessary risk-based controls. As a result, they failed to conduct required checks on a significant number of customers, including individuals known to law enforcement or presenting indicators of potential money laundering risk. This outcome highlights the importance of establishing and maintaining a robust risk-based AML-CTF program, not just to avoid substantial penalties, but to protect the integrity of your operations and reputation over the long term. So looking ahead, AUSTRAC's serious and systemic non-compliance, particularly regarding foundational obligations such as risk-based customer due diligence, will still remain a focus of AUSTRAC's enforcement work. In an environment of evolving threats, we recognise that some degree of failure is inevitable. Controls won't always hold up, and we accept that. But we're still seeing in too many cases basic obligations not being carried out effectively or at all, and unpersuasive proof that the business is taking reasonable steps to reach compliance. It's important to remember, AML-CTF is not a set and forget regime. You need to ask yourselves, how does AML-CTF risk actually play out in your business? Where are the real vulnerabilities? How are you monitoring whether your controls are working? And what happens when they're not? The AML-CTF regime is not designed to eliminate all financial crime. It's about taking reasonable, evidence-based measures to identify, manage, and mitigate risk. This means you need to explore a tailored and proactive approach. There is no one-size-fits-all solution. While we recognize that occasional failures may occur, it is critical that when these issues are identified, they are addressed promptly. Open, proactive communication with AUSTRAC, particularly when significant compliance concerns arise, is the most effective way to mitigate broader consequences. We saw this approach in practice recently when AUSTRAC accepted an enforceable undertaking from a corporate bookmaker following an extensive supervisory assessment. The corporate bookmakers demonstrated willingness to cooperate and proactively address its obligations. Therefore, AUSTRAC determined accepting an enforceable undertaking from the corporate bookmaker was the most appropriate regulatory response. This matter highlights the importance of collaboration, transparency, and early action in supporting compliance outcomes. In contrast, a culture which encourages avoidance or compliance window dressing will also be a focus of AUSTRAC's enforcement work. By proactively engaging with AUSTRAC and strengthening your compliance frameworks, you directly contribute to safeguarding Australia's financial environment. That brings us to the end of the enforcement update. While the nature of my day-to-day work means that some things do not end up in the broader public forum, I hope this has provided some useful insights into our enforcement focus and the importance of maintaining risk-based controls. Thank you for your time. It's been a privilege to be able to engage with you. That said, and I mean this in the nicest possible way, I hope you don't encounter me or my enforcement colleagues in future in the context of our day jobs of conducting enforcement investigations and enforcement action. So with that, I'll hand you back to Nikki to continue with today's session.
Thanks, Gemma, for that update. It's a strong reminder that while AUSTRAC understands the challenges of managing financial crime risk, there's a clear expectation that reporting entities are actively identifying, addressing, and learning from gaps in their programs. Finally, I'd like to take the opportunity to give you a brief overview of our initial insights from the 2024 compliance report data. As reporting entities, most of you are required to submit a compliance report to AUSTRAC each year, answering questions about how you have met your AML-CTF obligations. The information gathered from the compliance report provides key data inputs for our risk modelling of reporting entities and sectors as a whole. It helps us understand how you are tracking with your obligations, where there are areas of strength, and where some gaps may still remain. It also helps inform how we define our regulatory priorities and tailor our engagement and support going forward. As many of you will know, the reporting period for the 2024 compliance report only closed on the 31st of March this year, so we are still deep in the analysis. However, a few early trends have already emerged, and they align closely with the themes we've touched on today. To begin with, it's worth noting a positive outcome from the 2024 compliance report period, with 84% of reporting entities who have the compliance report obligation completed their 2024 compliance report, and this is up from 82% last year. It's encouraging to see an increase in engagement across the population. As mentioned, the data you provide gives us vital insights into how the regime is working, helping us shape guidance, identify gaps, and tailor our support where it's most needed. Ultimately, the more complete and accurate data we receive, the better placed we are to help you meet your obligations and protect your business from risk. Moving on to risk assessments. While it's encouraging to see that 74% of DCEs reviewed or updated their MLTF risk assessment in 2024, only 19% of these reviews occurred in response to AUSTRAC engagement, guidance, or feedback. While we acknowledge that not every AUSTRAC engagement will require a full reassessment of your risk profile, this number suggests that many entities may be missing opportunities to adapt their programs in responses to regulatory or environmental change. For example, AUSTRAC published national risk assessments on money laundering, terror, and terrorism financing this past year. These risk assessments should be used by entities to review and update their risk assessments. AUSTRAC presented sector-specific webinars to communicate the findings of these risk assessments at the time, and you can find these recordings of the sessions on the AUSTRAC YouTube channel. As you will recall from earlier, enhanced customer due diligence, also known as ECDD, is required in a range of high-risk scenarios. However, we continue to see evidence of inconsistent application of ECDD controls, particularly around senior management oversight. Of the 78% of DCEs that conducted ECDD in 2024, only 46% sought senior management approval to provide a designated service, and only 56% sought senior management approval to continue with a high-risk customer relationship. These figures suggest that escalation protocols may not be working effectively, or that decision-making is not being documented in line with entities' obligations. When it comes to reporting obligations, we know that timely, accurate reports are one of the most valuable contributions entities can make to the broader AML-CTF regime. However, compliance report responses continue to show variability in how these obligations are being met, particularly around the systems and controls that support detection and escalation. This has a flow-on effect to the governance and oversight of your frameworks. For example, only 48% of DCEs that confirmed they outsourced one or more of AML-CTF obligations said they provide reporting to their board or senior management on the performance of these outsourced functions. Given that outsourcing is relatively common, with 54% of DCEs stating they outsource one or more of their compliance functions, this highlights the need for stronger governance around outsourced arrangements to ensure oversight and accountability that remains in-house. Finally, let's talk about transaction monitoring. The data currently shows that of the reporting entities that indicated they detected suspicious activity, 50% did so via staff, while 37% identified it through transaction monitoring program. This alone tells us there's room to improve program effectiveness. But what's particularly important to highlight is entities that reviewed their TMP in the past year were more than twice as likely to detect suspicious activity, with 48% of those who had reviewed their TMP making a detection, compared to just 22% of those who hadn't. This reinforces a critical point. Much like your AML CTF program as a whole, your transaction monitoring program is not set and forget. Ongoing tuning, testing, and adaptation are essential to ensuring that TMPs remain aligned with your risk profile and capable to detecting suspicious activity in real time. Altogether, these insights help us where improvement is happening and where there's still work to do. And the data reflects many of the themes we spoke about earlier, such as the need for tailored risk assessments, consistent application of customer due diligence, clear governance, and effective systems and controls. We will continue to use this data to inform our regulatory focus and support activities, and we encourage you to reflect on how these insights might apply to your own program and practices. This brings us to the end of today's forum. Thank you all once again for joining us here today, myself, Nikki, Asim, and Gemma, and we really hope you found this session valuable. Bye for now.